Right, so a massive recovery that we've seen from the frontline indices, and that's on account of two factors. One is the big recovery that we saw on Infosys from lows, in fact, almost 3.5% from the lows on that counter. The street likes the deal wins and the fact that they've upped their guidance a tad. And, a lot of people now believe that there could be case for some discount narrowing between TCS's valuations and Infosys. So that stock at the high point of trade, taking higher the IT index along with it. And as a result of which, Wipro too, which reports its numbers today, likely post markets, has moved to the high point of trade. The other factor, which was the Nifty Bank, which was an underperformer, has now moved closer to the high point of today's trading session, which is also very close to its 50-day exponential moving average. So let's see whether we run the risk of getting into some sort of resistance zone or not, because we have been in this band and we've been, just meandering around choppily in this band.
I think the good part is that the December lows are holding, right?
Yes.
I mean, for the index, that is the crucial thing to watch. And for now, at least the December lows are holding. Let's see how the rest of the day shapes up. But just a couple of more stocks. Satya Industries is the stock on our radar. Now, for the uninformed, this company manufactures wood and agro-based paper in India. So the company recently won 3 major contracts for the supply of paper for printing textbooks. And the total volume of these contracts is around 17,000 tons, which is worth 200 crore rupees. Rajinder Kumar Bhandari, the Joint Managing Director of Satya Industries, joins us now. Mr. Bhandari, good afternoon and thank you for joining in. This order that you've won to the tune of 200 crores, tell us a little bit about when do you need to execute this order by, when will it start to flow through in your revenue stream, and what does this take your total order book to?
Yeah, these orders will be executing in the last quarter of this financial year. And after these orders, we have got another big order of almost 11,000 tons from another textbook board, which is worth over 100 crore, which too will be executed in the last quarter only. And the price realization is almost 10 to 15% higher than the present realization in the market. So presently with the new order and that 17,000 ton order you mentioned earlier, our current order book is over 50,000 ton of paper, which is almost 3 months production.
So what does that do to your revenues? Because you're talking about 300 crore worth revenues being recognized in the fourth quarter itself. This is the orders that you won for this fourth quarter execution, but I'm sure you are delivering other orders as well. The first half of this year, you've done revenues of close to around 900 odd crores. Do you think you'll be able to do better in the second half? What are your thoughts for the entire year and margins?
Yeah, we shall be doing almost over 500 crore plus revenue in the last quarter. And the same is likely to continue in the first quarter of the next financial year.
Okay, so 500 crores is what you've done in Q2 as well, and you're looking to do that even in the last quarter of the fiscal, right?
Yeah.
Okay, so that's a quarterly run rate. At any point, would you look to scale that up? Because I understand that you have an expansion plan in the wood pulping capacity. By when will that be operational, and what will that take your total capacity to?
Yeah, we are expanding our wood pulping capacity from 180 ton per day to 300 ton. And that project will be completed by the end of this financial year and will be operational in the first quarter of the next financial year. With that, we will be able to phase out pulp made from the waste paper, and it will add to the cost savings by almost 5,000 rupee per ton of pulp cost. So that will add to our margins in the long run, and also add to the quality, because wood pulp quality is always better than waste paper pulp quality. Yeah.
Right. So what does that mean for your revenues then in FY24 and FY25? I mean, if this plant, which, effectively doubles your capacity from current levels, comes on stream with higher margins, etc., what numbers are we talking about in terms of revenue and margins for FY24 and 25?
Yeah, financial year 23, we should be doing near 2,000 crore. And financial year 24 and 25, 10 to 20% increase in both the years. So we should be reaching anywhere around 2,400 crore in the financial year 25, provided the paper prices, they stick to the same level.
And
So
margins?
and margins will be anywhere, the EBITDA should be near 20 to 25%, and PAT should be anywhere between 10 to 12%.
20 to 25% margins. That's quite a bit. I mean,
Yeah,
in the
a bit
first
amount.
half, you did just 18%. So by when do you think you can get to 25% margins?
Yeah, because as I told, if we shift from waste paper pulp, which because we are far away from the port, the waste paper pulp costs us almost 5,000 rupee per ton higher in cost. So once we shift to wood pulp, which would be cheap and which would give better quality, so that may help us get better price realization also from the market. So both these factors, plus we are putting up a new boiler also, which will be replacing presently the present fuel of rice husk to rice straw. The cost of rice husk is almost 7 to 9,000 rupee per ton, and the cost of rice straw, which farmers burns in the north, which creates a lot of pollution in Delhi and other areas. So that costs us just 2,000 rupee a ton. So
Right.
all these factors together, they will increase the margins in the coming years.
Right. Another thing that I wanted to know from you is that you have paper cutlery production as well, which you've planned. I mean, we've been seeing a lot of shift from plastic to paper in straws, now cutlery, etc. as well. Can you tell us, when does that plant go on stream? What is the potential revenue from that?
Yeah, we are already having 2 machines of 2-ton capacity, and the 2 machines will be dispatched on 28th January to our plant. And by 31st March, we will have a operational capacity of 4-ton cutlery per day minimum. And in the next first 2 quarters of the year, in the next financial year, we are getting 4 more machines of 1-ton capacity each. So total, we will be having more than 8 to 10 ton of cutlery capacity per day. So that will lead to a revenue of almost 50 crore with an EBITDA margin of 35 to 40%.
So for this... Sure.
Yeah,
Sorry, I didn't mean to interrupt you, but for this capacity expansion that you're doing, do you have enough funds? Will it be purely from internal accruals? Would you need to tap the market at any point?
Yeah, cutlery, we already had the infrastructure in hand because we had entered long time back with the Zume. Stock preparation was already there, and 2 machines we had. The 6 machine cost is just 10 crore. So once we start this we are doing only on pilot scale. So if margins are good and sustainable, then the management may go into this segment on higher scale also in the coming years. So
All right.
finance is no issue. Yeah.
And final question from my end, we look at your shareholding pattern. You've been talking about strong growth in your company. You've been talking about the potential, etc. But no institutional investors hold any stake in your company. And this despite you meeting a lot of them. I mean, I see all the notifications on the exchanges. You've met Sage One, Yes Capital. You're meeting Kotak and Motilal Oswal today, etc. Why is it that institutional shareholders are not yet investing in the company, or can we hear something like that in the near future?
Yeah, maybe you are right. Maybe we could not make ourselves visible in the past, and with you giving us an opportunity today, the people, they are coming to know Setia industry in the last 1 and 2 years more and more. Because earlier when we used to listen to paper industry, maybe Setia, which was making even 100 crore plus PAT, wasn't ever mentioned. But CNBC has given this opportunity to us. I think more and more people will know us, and definitely they should come, I think.
Okay, all the best. Thank you so much for joining us. I think the street definitely liked what you were saying, because through the course of the conversation, the stock has gone up 4.5%. So good luck with your capacity expansion and good luck with your business as well.
Also, and he said that CNBC has given him the opportunity to, talk about his business, etc. At the same time, it's a responsibility as well,
Yes.
because he better deliver on the numbers that he's been talking about and corporate governance of the company. And we'll also watch out for whether institutional investors actually go ahead and invest in the company as well. Plans so far great, but let's see whether they execute or not.
And on the stock, the delivery has been good, right? I mean, it's up, what, 40% in the last 1 year itself. So the stock market perhaps recognizes the opportunity here. Well, all the best once again. Let's take a quick break. On the other side, Mitesh Thakur will be joining in for some technical trades. So keep it with CNBC TV 18.
देवी और सज्जनों